Hello viewers, welcome to my channel. I am Hasham Ali Khan. So this is the second video on the main problems on depreciation. Last video I have completed 4 main problems on depreciation. Before that I have completed 4 videos on short questions, 2 videos on theory of depreciation. So hope my regular viewers are watching continuously the earlier videos. If you join now in between, you may not be able to understand. So my suggestion, keep a rhythm. Keep always the rhythm in watching one video after the other. Then only you can be able to get the complete command. So before starting the video, I expect my viewers to have a printout of the problems which I have given in the link under my description. Now before start explaining about this fifth problem, take a screenshot of the solution. Then I'll explain all the points about problem number 5. Come on, see the fifth problem. On 1st April 2017, Rosa purchased 2 motor vehicles costing $50,000 each. So one vehicle 50,000, another vehicle 50,000. Total 1 lakh 50,000 plus 50,000, 100,000. 100,000 means 1 lakh. So $1 lakh worth of 2 motor vehicles were purchased on 1st April 2017. On 1st Jan 2019, she sold one of the motor vehicle for $35,500. The sale proceeds were received by check. First of all, she has purchased the motor vehicle on 1st April 2017. The first year ends on 31st March 2018. So we have to close the year 31st March 2018. After closing the year, then we'll come to 19. On 1st January 2019, she sold one of the motor vehicle for $35,500. Then depreciation is charged at 20% per annum on reducing balance method. So a full year debt is charged in the year of purchase and none in the year of disposal. We are not calculating depreciation monthly. If the vehicle is purchased during the year, then full year depreciation will be provided. And if a vehicle is sold during the year, no depreciation will be provided in the year of sale. That's what given. Now, prepare the provision for debt account, motor vehicle account for the year ended. Balance the account on that date and bring down the balance on 1st April 2019. And prepare the disposal account, asset disposal account. So we are going to make provision for depreciation account. Now see carefully. First of all, on 31st March 2018, depreciation will be provided. The entry for providing depreciation is income statement debit, provision for depreciation credit. Income statement debit, provision for depreciation credit. So this is the provision for depreciation account. On motor vehicle, credit side, income statement. Now we have to provide depreciation on 2 vehicles. The cost of 2 vehicles is 1 lakh, 100,000. So what is the rate of debt? 20%. So here I am writing 100,000, 1 lakh into 20 by 100. So it will come to 20,000. 20,000 is the depreciation for the first year. 31st March 2018. Now we want to close the year. Same date. Balance carried down 20,000. Here balance brought down 20,000. Now we are in the next year, 1st April 2019. No, sorry, 1st April 2018. Year ends on 31st March 2018. Then the next year will begin from 1st April 2018. 1st April 2018. Now this year will go up to 31st March 2019. The year has started from 1st April 2018. The year will go up to 31st March 2019. But before 31st March 2019, on 1st January 2019, one of the vehicle was sold. One vehicle was sold. Now you must remember, whenever a machine or any non-current asset is sold, some 4 entries have to be passed. 4 entries have to be passed whenever an asset is sold. Now on January 1st January 2019, one vehicle was sold. Out of 2, one vehicle was sold at a price of 35,500. The first entry is transfer. Here, for your sake, for your understanding, I have written the journal entries. All these entries I have explained in the first video, theory video on depreciation. So if you have watched that video, now you know what are the entries to be passed on disposal of asset. First, transfer the original cost of the asset to asset disposal account. The original cost of the vehicle was 50,000. So that 50,000 original cost of vehicle should be transferred to a new account. The new account is asset disposal account. The name of the new account is asset disposal account. So entry asset disposal account debit 50,000 and motor vehicle account credit 50,000. This is the entry. So asset disposal account should be debited to debit side. Asset disposal account debit side. I will write on motor vehicle 50,000. Asset disposal account debit, motor vehicle credit. So asset disposal account debit side, motor vehicle 50,000. First entry. Now second entry is provision. The provision for depreciation on that vehicle which was sold. 1 year depreciation. The rate of depreciation is 20%. So for both the vehicles, depreciation was 20,000. $20,000 is the depreciation on 2 vehicles, but 1 vehicle is sold. So what is the depreciation for 1 vehicle? 10,000. So 10,000 is the depreciation on that vehicle which was sold. The entry will be provision for depreciation account debit, asset disposal credit. The provision for depreciation should be debited by 10,000 and asset disposal account should be credited by 10,000. So this provision for depreciation debit side, here debit side, asset disposal. $10,000. This is 2019 Jan 1st. Here also 2019 provision for debt. Provision for debt, that is 10,000. So here provision for debt should be debited, asset disposal should be credited. So here I have taken provision for depreciation debit side asset disposal and asset disposal account credit side provision for debt 10,000. So 2 entries I have completed. The third entry is cash received on sale of the asset. At what price the motor vehicle was sold? 35,500. The asset was sold for 35,500. So we are getting the cash. So entry will be bank account debit, asset disposal credit. Bank account debit, asset disposal credit. So what is the amount? $35,500. 35,500. For this price, 1 vehicle was sold. The bank account we don't have, but asset disposal should be credited. To credit side asset disposal, I am writing cash book. And in bracket you can write on bank. How much amount is received? 35,500. 35,500. Now next entry is profit or loss on sale of this asset. On this asset, what is the profit or loss? If credit side is less, there is a loss. If debit side is less, there is a profit. Here on debit side we have 50,000. Credit side we have 45,500. See here, 35,500 plus 10,000, 45,500. So here it is less. So there is a loss. So what is the entry for loss? If there is a loss, income statement debit and asset disposal account credit. So asset disposal account credit side, I am writing income statement. Same date, 1st January, same date, income statement. loss. Loss on sale. How much is the balancing figure? Take the amount 50,000. Here also 50,000. 50,000 minus 45,500, you will get 4,500. This is the balancing figure. That's all. 4,500 is the loss on sale. So here asset disposal account is closed. Over. Right? Now we'll close this account. Provision for depreciation account. Now current year ends on 31st March 2019. Our year started on 1st April 2018. The year ends on 31st March 2019. So 2019 March 31st. March 31st. Entry will be income statement debit, provision for debt credit. Every year the entry will remain same. Income statement debit, provision for debt credit. So this is the provision for debt account. So here I will write down income statement. Now what is the rate of depreciation? 20%. On which method? Reducing balance method. It is given. Yes, reducing balance method. So I have to calculate. Only on one vehicle. At the beginning we were having two vehicles. But now during the current year one vehicle was sold. Only one vehicle we have. So we have to provide depreciation on only one vehicle. What is the cost of the vehicle? 50,000. How much depreciation provided on one vehicle at the first year? 10,000. So 50,000 minus 10,000. 40,000 rupees is the carrying value. On this 40,000, the rate of debt is 20%. So 20 by 100. So 40,000 into 20 by 100, 8,000. So 8,000 is the depreciation for the second year on one vehicle. On one vehicle. So 20 plus 8, 28,000. 20 plus 8, 28,000. Here also I am writing 28,000. From 28,000 deduct 10,000. So 28 minus 10, 18,000 is the carrying value. 18,000. Balance carried down. Last date 2019 March 31st. Last date. Now here 18,000. Next year will begin from 2019 April 1st. Last date was March 31st. Now next date April 1st 2019. Balance brought down 18,000. That's all. This is the end of the problem number 5. So problem number 5, all the points I have completed. So in this problem the new point is one of the asset is sold. So whenever an asset is sold, these 4 entries you have to remember. The first entry will be transfer the original cost of the asset to new account called asset disposal account. A new account will be opened, asset disposal account. This account will be opened only when there is a sale of asset. Here in the problem it is given vehicle was sold. That's why I have opened the account. So entry asset disposal debit, motor vehicle credit. So debit side I have taken motor vehicle 50,000. First entry over. Second entry, transfer the accumulated depreciation on that vehicle which was sold. The vehicle which was sold, the depreciation provided for 1 year 10,000. So provision for debt to asset disposal account credit. The provision for depreciation is debited, asset disposal is credited, provision for debt 10,000. Third entry will be sale proceed. The bank account debit, asset disposal credit. So here cash book, bank 35,500. Last entry profit or loss. If debit side is more and credit side is less, there is a loss. If credit side is more, debit side is less, there is a profit. But here what is happening? Debit side I am getting more, credit side I am getting less. The balancing figure is loss. The entry will be income statement debit, asset disposal credit. That's it. This is the problem on sale of asset.